Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 18th, 2025, and we're diving into Enerpac Tool Group's first quarter fiscal 2026 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Enerpac Tool Group, a leader in industrial tools and services, has just released their Q1 fiscal 2026 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Enerpac Tool Group reported net sales of $144 million, a slight decrease from last year. John, how does this impact their profitability?
Despite the 1% decrease in net sales, Enerpac maintained a strong operating margin of 19.8%. Their net earnings were $19.1 million, translating to 36 cents per diluted share. The adjusted EBIT margin was 22.4%, indicating solid operational efficiency despite the sales dip.
That's interesting. How did they manage to keep their margins stable?
Enerpac's focus on cost management and operational efficiencies played a crucial role. They also saw a 4% organic growth in product sales within their IT&S segment, which helped offset some of the declines in service revenue.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 38 cents, but Enerpac reported an adjusted EPS of 36. John, what does this mean for investors?
This slight miss of 2 cents against the forecasted EPS might raise some concerns among investors. However, it's important to note that the company is still maintaining strong profitability metrics, and the miss is relatively minor.
Do you think this will affect investor sentiment significantly?
While it might cause a short-term reaction, the overall financial health and strategic outlook of Enerpac should reassure long-term investors. The company's guidance for fiscal 2026 remains robust, which is a positive sign.
Operational efficiencies and future outlook. Enerpac's operating cash flow increased to $16 million, and they returned $15 million to shareholders through share repurchases. How does this reflect on their operational strategy?
Enerpac's increase in operating cash flow from $9 million last year to $16 million this quarter highlights their improved cash management. The share repurchase program is a strong signal of confidence in their future prospects and commitment to returning value to shareholders.
Looking ahead, what can we expect from Enerpac in fiscal 2026?
The company is maintaining its fiscal 2026 outlook with projected net sales between $635 million and $655 million and an adjusted EPS range of $1.85 to $2. This guidance reflects their optimistic view on organic growth and operational improvements.
CEO insights and strategic initiatives. Paul Sternlieb, Enerpac's CEO, mentioned some favorable trends and a cautiously optimistic outlook for 2026. Can you elaborate on this?
Absolutely. CEO Paul Sternlieb highlighted solid sales growth in the Americas and even stronger order growth, which reinforces their positive outlook. This optimism is tempered with caution due to market uncertainties, but the strategic initiatives in place are promising.
What strategic initiatives are they focusing on?
Enerpac is focusing on expanding their product offerings and enhancing operational efficiencies. Their commitment to innovation and customer-centric solutions is expected to drive growth in the coming quarters.
Key takeaways. In summary, Enerpac Tool Group's Q1 fiscal 2026 results show a company maintaining strong operational performance despite a slight dip in sales. Their strategic initiatives and robust guidance for 2026 are encouraging. John, any final thoughts?
Enerpac's focus on operational efficiencies and strategic growth initiatives positions them well for the future. While the EPS miss is notable, their overall financial health and strategic direction remain strong.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Enerpac's performance in the comments below.